business right now appears to be sort of basic economy or those economy classes, and that's weighing it down. So actually, I expect that Delta's earnings report will be better than most this quarter. So I think it'll get worse and worse as you get into the low cost and ultra low cost carriers. Because again, that's I think where the majority of the pain is in fares.
Yeah, because going through the quarter, like corporate travel rose 13% for Delta in the second quarter. Revenue from international passengers also increased, and premium products jumped 10%. So basically, business people are traveling. We're going overseas, and we're buying business class or first class. So is no one going to Idaho in economy?
No, well, I mean, people are going. They're going for lower fares, right? Their load factors were great on Delta, right? They were like 87%, so they're filling airplanes as well as they filled the year prior. I think Delta will get a bit of a tailwind as business comes back. That tailwind applies to Delta, United, American, the big business airlines. I mean, management always paints a really nice picture of how everything is going, but every market but Atlantic showed lower yields year over year, and yields the price the customer pays per mile they fly. So to me, that's synonymous with fares. So what I saw was weaker fares. They were really bad into Latin America, down I think it was 12% or something like that. They were down a couple percent for the domestic market. Into Europe, it was up 1%, but if you do it on a unit revenue basis, I don't want to get too complicated about how that works, but let's just say that factors in load factors there. It was down. And so what that's telling me is that they're having a harder time filling airplanes going across to Europe at the price point they want to fill. So they notched back a little bit how full those airplanes were. So I generally think, from a revenue standpoint, not boding well at all for the rest of the airlines they're going to report. And I didn't see any sort of silver lining, for 3Q. It looks like a weakening market to me.
So talk to us about capacity out there, George. I thought that there's some capacity constraints out there which might push fares higher because maybe Boeing wasn't delivering as many aircraft as they want, maybe even Airbus as well, so the airlines didn't have as many aircraft as they really needed. Is that a capacity? What is the capacity of the industry these days?
Yeah, so I think that's a narrative that's definitely been going around the street, and I think that's pushed some investment in airlines. So we haven't seen that, right? I think there's a couple things that are kind of working against that, and I think one, I think U.S. airlines in particular have been taking plenty of deliveries. They're prioritized by Boeing, right? Boeing sort of lost business in China. China's been weakening, so I don't even know if China needs as many airplanes as Boeing used to send to them. But they went around and got a bunch of orders from Southwest, United, Alaska, and Boeing had been feeding them airplanes before we had some of the problems earlier this year with the Alaska flight. So that means most of the U.S. airlines had the airplanes they expected. Yeah, we saw Delta, they added, I think, 5% more seats, and available seat miles, they added 8%. When we look at this market, we see in both 2Q and 3Q additions kind of in that 5%, 6%, 7% range for seats in domestic, seats in Latin America, seats going into Europe. And that's well above GDP growth rates. And so what I think also is going on here is if you were an airline and you thought this bounce back travel post-pandemic, hey, there's all this pent-up demand, they're all going to fly this summer, and it's going to be growth greater than GDP, I think you were wrong, right? We're basically saying we think growth in travel is recoupling with GDP like it was prior to the pandemic, and you can't add 5% seats to this market. The U.S. market isn't growing that fast.
What part of any of this, and you kind of sort of answered it, is just also tough comps because we were expecting the scenario that you just lined out?
Well, I mean, another thing we've put together recently, it's on the Bloomberg terminal under our BI space AIRLN dashboard and Aero G dashboard. We looked at return on invested capital. We looked at margins at U.S. and global airlines. And they did better last year, but if you look at last year, those margins weren't pre-pandemic margins. I mean, Delta's a bit of a standout. Their returns on invested capital are doing better than a lot of their competitors, and Ed Bastian called that out a bunch of times today on the call, of course. But most airlines in the U.S. market are not getting returns on invested capital or margins like they were prior to the pandemic. So it is a tougher comp, I guess, coming out of the pandemic. But this is not the airline industry we saw in the past decade, and that's because we got record revenues, but those pilots took a big chunk, right, when they got their 20% increases, and the airlines aren't pricing to get that back.